Hey there, this is Champion Trader Kevin Davey, and today I'm going to build a simple algo trading strategy for crude oil. So let's get started. So my goal today is to give you a simple yet pretty effective crude oil strategy. And while I do it, I'll kind of walk you through some of the steps in the process I use to develop trading algos. So let's get started. First off, realize that I'm going to show you results based on my testing. You should always test things for yourself, and that's regardless of what I say or what some book says or someone on Twitter or an internet site. Always test and verify things for yourself. That's the best way to go. And as I mentioned earlier, this simple example incorporates most of what I do in my trademark development process, but I do skip some steps just to keep the video short. But for those steps that I do skip, I'll at least give you a little bit of an overview so you'll understand what I'm talking about. With that in mind, let's get rolling. Here's my process. I call it the strategy factory because what it allows you to do is to build strategy after strategy, and you use a consistent, objective process, which is really important if you want consistent trading results. As you can see, there's a whole bunch of steps here, and it starts out with goals and objectives, and it ends with live trading. And I'm going to walk you through most of these steps. So let's start with goals and objectives. It's amazing how many people do not do this. They do not come up with goals. And you really have to do it to create a good strategy. You have to know what kind of market you want, time frame, the style. Maybe you're doing trend following, maybe you're doing mean reversion. Helps to know that up front. But most importantly, what really is important is you want to know your return that you're looking for and what kind of drawdown, what kind of risk are you willing to endure to get that return. Because if you don't have that, you're going to be in big trouble. And the reason why that's true is you'll be building a back test, and if you don't have goals for what your profit and drawdown should be, every time you look at an equity curve, you'll say, that sort of looks good. I think I can make it better. And you'll go back and you'll tweak the rules and you'll add filters and you'll do a lot of things that just lead to curve fitting. And I'll tell you what, those things do not work in real time. That's the ultimate goal. It's not building a great back test. It's having great real-time results. And unfortunately, changing your strategy a lot will not give you that kind of real-time performance. So it all boils down to having goals. You want goals up front. Then, if your backtest meets the goals, you move on. Simple as that. Okay, so next we have our trading idea. Here's the algo that we're going to build. That's what it's going to end up looking like. And as I mentioned, it's going to be crude oil. And the reason I trade crude oil and a bunch of other futures markets is because I want diversification. I want some metals strategies. I want some agricultural strategies. I want some softs, currencies, everything I can get. That helps build a diversified portfolio. And then the other nice things about futures, one, you can have a lot of leverage, which is nice if it's used the right way. And two, at least in the US, you have some tax advantages, which make it a whole lot better than trading stocks or ETFs. In this video, we're going to stick with crude oil and the futures markets. Now let's get an idea to test. This idea has two components to it. First of all, I'm going to look at the current close relative to the 100 bar average close. And if I'm above the 100 bar average, I'm going to consider going long. And if I'm below it, I'll consider going short. So it's kind of a trend indicator. Okay, that's the first part. The second part is where the closing price is in the overall range over the last certain number of bars. In this case, I'm using the name input var2. That'll be a number of bars that I look back. I'll calculate the high and low, see where the close fits in that range. Obviously, if the close is at the top, then that value is going to be 1 or 100%, and if it's at the low, it'll be 0. And if that number is less than another input variable that I'm calling input var33, then I'll consider going long. So if you think about what we're doing here, we're looking for an uptrend to go long. That's where the close is above the average close of the last 100 bars. And then we're looking for the recent close to be in the lower part of the range over a certain number of bars. And that is sort of like a pullback. So really, it's a trend follower, and you're trying to buy in a pullback. And obviously, vice versa for shorts. I like to do symmetric strategies like that. So the rules to go short are going to be exactly reversed. And instead of going less than input var for our measurement of where the close is over the range, it's going to be 1 minus that value. So it's still symmetrical. And that's our idea. Pretty simple, right? I'm not putting a stop loss with it, not putting a profit target. You could, of course. Sometimes I do, sometimes I don't. This would be a standard stop and reverse system where if I'm long and I get a short signal, I first exit the long and then I go short. So there's two parts to that, and vice versa for short trades. Here's the code. Might be a little hard to see, but if you go to the comment section of the video, you'll find a link where you can download that actual code, put you on my email list. If you're already on my email list, don't worry, you won't get bombarded with more emails. You'll just get this code. And this code I have in Tradestation format. Of course, knowing those rules that I just explained, you should be able to convert it to just about any trading platform. And you can see in this code where my input variables are. And those are the two variables I'm going to optimize. And I'm only doing 2 variables for this strategy. And that might be a little shocking to some people. They might say, well, wait, we want more variables. Why don't you do 10 or 20? Well, I have a lot of other videos out there that help explain why building a strategy with a ton of variables is not a good way to go. The simple strategies, believe it or not, tend to work better going forward. Okay, with that, we're going to move on to what I call limited feasibility testing. And the idea here is not to see if the strategy is good necessarily, but just to see if it has any merit. A lot of times if you test over a 1 or 2 year period, you'll see if your strategy has any kind of value to it. And most of the time it won't, especially when you include slippage and commissions, which you should always do. What you'll see is most of the time strategies will fail. That's pretty much the rule. You test 100 strategies, probably 95 to 99 of them are gonna fail. And that's just the way it goes. It's hard to find strategies that work. Now, I do this limited testing because if I wanted to, I could add some filters, and I'm not testing over all the data. If you test over all the data and then you rerun with slightly different rules and filters and that kind of thing, all you end up doing is curve fitting. So you have to watch out for that. But if I'm only doing the test on a couple of years of data, I can do that more easily. Okay, a couple other points. As I mentioned, there's 2 optimized variables, and I'm going to do 25 iterations. So each variable, I believe, has 5 different values. So 5 times 5 is 25. And I'm going to do this with 360-minute bars. I use all different size bars in my testing. This time I decided to use 6-hour bars. Well, we run our optimization, those 25 iterations. Here are the results. You'll see on the far right column is the net profit over this, what was a 2-year period. And you'll see all but 3 cases are profitable. And that's really nice to see. No matter how I change these variables within the ranges I looked, which were fairly wide ranges, I have profitable trades and overall profitability. And that's nice because it shows both profit and it shows robustness. You know, if there was only one case that returned a profit and all the other ones lost money, I might think a little differently about this strategy. And in fact, I definitely would, because it doesn't show robustness. So this is a simple test to show robustness, and it works pretty well. So at this point, I feel pretty confident that, hey, maybe I have something here. I still don't know for sure. That's why I move on to the next step, which I do with walk forward testing. Now, there's a lot of different ways to test out there. What most people do is optimize testing, where they take a strategy, they optimize it up until yesterday, and then they use whatever best set of parameters they've got, then start running that today and run it live. It's the easiest way to do it. It's what the trading software kind of encourages, just the way it's set up. The problem is it's terrible. It's just terrible to do that, because this is just using optimized results, and the optimized results will almost never be that good going forward. They might work for a little while, they might be so-so, but it's not a good way to go in general. A much better way, and there are a few different ways to do it that I'm not going to mention, like out of sample testing. I guess I just mentioned it, right? I use walk forward testing, and I have some other videos out there on walk forward testing, but what it does is it produces a lot of out of sample data, which is noted in the yellow. And in this particular case, you get from 2012 to 2021 as being out of sample. And that's nice, because you want out of sample data. It is a lot more representative of future performance than in sample optimized data. So it's a great technique. Now, I did it. I don't include the code in the sample that I give you, but this is a good way to go. And once you get the results, then you go on to the next step, which is Monte Carlo simulation. And that sounds kind of fancy, and I know it scares a lot of people, because they say, well, what's Monte Carlo? That sounds kind of scary. All it helps you do is determine probabilities. Probabilities of a certain drawdown, your risk of ruin, of maybe having a winning year. It's just a technique to help you put things in perspective of probabilities, which is really important when you're trading. You can get a free Monte Carlo tester. It's in Excel format. If you go to my website, if you go to resources and then you go to trading calculators, you'll see a trading calculator page, and this will pop up. So I ran the Monte Carlo. I had some criteria to use for it, and if it passes a certain threshold, then I know the strategy is good. And I didn't mention, the same holds true for walk forward. If it passes a certain threshold, then it goes on to Monte Carlo. So at each step along the way here, you could actually throw the strategy out if it doesn't perform. And that's a lot better than trying to force something to work. The next step, once I have good Monte Carlo results, is incubation. And what that is kind of real-time testing. You know, maybe you took all the care in the world to build a good strategy and you tried not to curve fit and tried not to use hindsight bias and you tried just to do everything right, but there is no substitute for running a strategy in real time to make sure it still performs. And that's what incubation does. This is a money saver beyond belief, trust me. When I talk to my Strategy Factory students, people who've taken my workshop, 90% of them have told me incubation saves them money. So that's a big one. And you can see the incubation period here. It's a year-long period in this case in the blue. And you can see the strategy did pretty good in the blue period. The white period is the walk forward period, and the variables I used were not the best. It was not an optimum case. It was just a representative case. I specifically didn't pick the best one because I didn't want it to be too good looking. There are combinations out there of variables, of the input variables, that actually give better profit factor. 7 of them, in fact. So my point is, I didn't want to show you an optimized backtest. This is just a fairly middle of the road one for this strategy. And you might say, hey, you know, that doesn't look that good. I could do better than that. I could do a lot better. And you know what? I totally agree with you. Of course, I could make that backtest look better. That area in the white, that looks decent. It's not that great. You can always make it better. And that's one of the huge pitfalls in algo trading. You have to remember that building a great backtest is not the goal. I'm going to repeat that. Building a great backtest is not the goal. A lot of people think it is because that's the only thing you really can measure until you turn the strategy into working in real time. But that's not the goal. Real-time performance is the goal. And obviously, you only see that by running the strategy live. And as far as your whole development process, you really have to build a lot of strategies to see that the method you're using works in real time. And that's what I've done with my Strategy Factory process. I wouldn't be building strategies with it if I didn't get acceptable real-time results. And it doesn't mean I make money every day or every week or every month or even every year. But if you trade enough strategies and you trade them long enough, you should tilt the odds in your favor. And that's what this is all about. Okay, so that's the strategy. It works fairly good. It's not the best one in the world, but it could be something you could use. Of course, if you're just getting into algo trading, or even if you have traded there for a while, there's a lot of things you still have to answer. Like, okay, Kevin said that was a decent back test and a decent out of sample performance, but what is really good performance? What's the right way to develop an algo? How do you avoid over optimizing? Should you use walk forward? I do, but does everybody? And what happens when things go wrong and the algo just starts losing money? There's just a ton of questions that you have to ask yourself if you're truly going to try algo trading. And the old phrase, you don't even know what you don't know, holds true when you first get into algo trading. You don't even realize some of these things until you start trading. But if you want to start, or if you want to improve your trading skills with algo trading, here's what to do. First, you want to research a platform. Make sure you have a trading platform that can do back tests. You also want to research brokers. Make sure you're working with a reliable broker that supports, let's say, automated trading. Not all of them do. Read some strategy development books. There's a lot of good books out there. I've written a book specifically on strategy development, and I've written a few other books too. And there's other authors too that you can find some value with. Then you should realize that this is pretty complicated stuff, and you may or may not be able to do it on your own. You may need some advanced help. That's where I could come in. I run a workshop. It's called the Strategy Factory Workshop. That might be worth looking at. Of course, you might be able to just do it on your own, which is great. That only you can decide. Next, what you want to do is you want to start developing that strategy number one once you have your process down, and then monitor it. And if things aren't going right, maybe you have to adjust your process. That's where working with me helps, because I've already given you the process as part of the class, and you don't have to worry about that. But you still want to monitor and watch what you're doing, and you could improve upon what I do. And you might add your own little touches. A lot of people do. That's really how to get started. Okay, so to wrap it up, please, if you liked this video, please leave a comment. Tell me I'm completely wrong the way I'm thinking. Tell me I'm completely right. Ask a question. I respond to all comments. And of course, hit the like button, hit the subscribe button. Give it a thumbs up for those likes. I'd appreciate it. I'll keep making more videos. I'm Champion Trader Kevin Davey, and I hope you enjoyed this video.